Welcome everyone to the Kendall Report. It is Sunday night. Sorry I'm a little late. Trying to have a life and work at the same time is always interesting. I got over here a little late this afternoon. Anyway, folks, we got a giant week ahead of us, especially after what we saw last week. And market conditions and all of the elements that are out there right now are pretty substantial. So before I get into tonight's video, hit the like button. Okay, get it? Okay, good. Subscribe and make sure you share these videos. Let's get this channel to grow. We got some crazy stuff coming on, not only to the end of this year, but we're going to have some, I think, some wild things going on next year. We got elections, we've got wars going on. Folks, man, I'm telling you, this could make COVID look like a joke. I'll say that part out loud. I was thinking about this. I go, man, there's COVID was manufactured, we'll say, and then the Fed just filled up with all the money. Well, what do you do now? I mean, is the Fed going to make this giant pivot? We're what, 2 weeks out roughly from the next Fed meeting. Is that the plan? Make a giant pivot, lower rates, everything will get fixed? No, none of that will fix anything, right? Wars and market sentiment where it's at right now, we're starting to see literally, I think this is our fourth quarter where year-over-year earnings are starting to implode a bit. And I think if you go back and, the dynamics, we all get sucked into the flow of the markets. And when we got up to 4,600, everything looked really, really good. Looked like we'd back off. We'd hold a number of things, 42% on the decline on the database. Guess what? That's over. I'll show you in a minute. We're below 42%. That doesn't mean that you go into an outright collapse, but a lot of metrics that were basically typically will rotate and do certain things are changing. And this even goes all the way to the beginning of this year, folks. Most everybody, I don't like the global label, but most everybody got this wrong this year. And even now, after the carnage that feels terrible, the S&P is still up 10% on the year. The Nasdaq's up 24%. The only thing is the zombie companies in the Russell and the banks. I saw some guy, there's some troll guy that hangs around Twitter. It's kind of funny. He's going, hey, how about those banks you told us to buy? Actually, the banks, if you look at the chart, they aren't that bad, but that whole trade idea was to scalp off that low. There's about a 30% gain in there. So yeah, and you folks know what I've been talking about with the banks, but they're setting up a potential right shoulder here. So they haven't plummeted through the lows of last winter. Those things haven't happened, but we're going to have a lot of challenges, right? So just to kind of go down this trail just a bit more as we set up this week, because, I mean, we've got really major economics coming out. We've got huge earnings coming out. I'll go through those. Somebody already mentioned it, Meta, everybody, right? All the big ones, Microsoft, all the Magnificent Seven, most of them are out there this week. We also have, we got GDP, and we have the Fed's favorite measure, PCE. So there's plenty of stuff to go through. And not to mention, I didn't total them up, but I'm going to do a rough total here. Probably about 850 plus, that's a rough number, earnings reports coming out. There is a ton of stuff. I'll go through more detail here in a minute on this. But just kind of setting up the week that's ahead of us. This is a big one. And, if you read some of the stuff that's hanging around the internet and everybody's kind of going nuts. I even put a tweet out after the database came out. If you follow me on Twitter, portfolio expert, no E in the expert. If you follow that, I put out that, we could be looking at a 41 handle, but that doesn't mean we just collapse and go down there. There's some challenges to come up for sure, but you'll see as we go through the technicals, it's once again everybody's got I don't like to use the term oversold because I never understood what that really meant. I get that a lot of people get short, but I don't use typical terms that get you to fall into patterns in the dialogue and the noise that you hear from the financial media. Be careful with that. So I use a lot of different words. I had this a quick story. I had a guy that I used to know, and he always used to say, be careful what you say to yourself. You might believe it. So be careful what you listen to. Be careful how you handle these words and the rhetoric that's around you, because it really words do matter, and this stuff does affect you, especially with Twitter. If you go on there, I mean, just the whole world we live in now is pretty very risky from the standpoint of being influenced by outside influence. Here I am on YouTube telling you this, right? So I'm one of those folks. So I get things wrong. Everybody gets things wrong. But overall, the database has been spot on. When it started right after the 4,600, we saw the short-term database peel off. It got a little bit of a bounce, and then it went all the way back down to almost under 10%. And now it's trying to stabilize, but there's a ton of work to do here. So let me try to come back a little bit from what I've been talking about, and let's talk a little. Let's go through the economic stuff that's coming out, and then I'll come back and try to summarize some of this, because there's just a ton. As I was getting ready tonight, I was just like, wow, this is a big week coming at us. And if you recall, these things happen. I don't look forward to see what's coming out. I probably should. I literally, I run like I tell you folks. It's like driving down the road with the bright lights on. I'm just looking for the next corner, maybe see 200 meters down the road or something. But I had been talking about the second week of October would be a really big one. So this is kind of coming into kind of the tail end of the second into that third week. And then we're coming into the end of the month, which is, I believe, a week from Wednesday. So there's not a lot of trading days left. I think there maybe is 8 trading days left in this month. So we're beyond that period. But this is where everything was supposed to hit the fan. And so we're definitely at that point right now. And I think it's going to be very material. So we should have a very busy week. I don't have any disruptions that I'm aware of right now. So let's just go through some of this. So Monday, we got Chicago Fed. No one really cares about that. But Tuesday, we got PMI flash 49. We got Richmond Fed coming out. And then on Wednesday, we have home sales, new home sales, supposed to be 683,000. And then we have mortgages coming out. They were down 6.8. I suspect those will stabilize a little bit as we come into that number. Thursday, we got typical claims, which has been unbelievable. We had numbers under 200,000. Continued claims at 1.734 million. I have been telling you, as far as I'm concerned, that number can roll between 1.5 and 2 million, and under 1.5, then maybe that would mean just the labor market is just going to go on forever. If it gets above 2, maybe that's finally what the Fed is hoping for, but I'm not even sure they know what they're hoping for anymore. And then, of course, we have on Thursday, we also have durable goods expected to come in higher. I've been talking about manufacturing and is trying to turn around, but we saw really weird conflicting numbers that came out last week. Then we have, there's a lot here, folks, durables, and we have GDP. GDP, the consensus number out there right now is 4.1, and I see expectations from 3.8 to 4.1. The deflator is a number I always watch. It's expected to come in at 2.5, and then we move into Friday. We're not done, and I haven't even gotten into earnings yet. Okay, there's just, this is going to be a huge impactful week, and I'll try to summarize this once I get through everything. But we have Also, the U of M consumer confidence numbers expected to be at 62.8, and PCE a +3 year over year, 3.5. The core is expected year over year to be 3.9. These numbers have been coming in a little hotter, and for whatever reason, relative to rates anyway, that has been a number that the markets had reacted inversely in how you would expect them to act. Well, I mean, I don't know, maybe I should have advertised that this is possibly a popcorn night. That might be, this could go on. I'm just looking, I'm through about half of what I have on my sheet here. So let's talk about, let's look at the earnings real quick, because this is Monday, we have 71, mostly not real big material companies on Monday, so that's good. But there is some manufacturing companies is kind of what the mix is right there, which basically plays into the Chicago Fed MFG numbers of manufacturing numbers coming out. And then on Tuesday, it starts to get interesting. We got Microsoft and Google and Visa. I believe those are all after market close. I forgot to note that, but I believe that's the case. So a lot of that effect is going to roll to Monday, to the next day into Wednesday. But we got 166 coming out on Tuesday. There's Google, Visa, just name it. It's Tuesday. I marked down Tuesday and Wednesday are the big earnings days. And these are things that are likely to potentially turn the sentiment. And I'll try to, when I get done, I'm going to try to summarize what I came up with by going through all this. And then on Wednesday, we got 277. I mean, we've got Meta, we got Boeing, Intel, we got all kinds of banks, energy companies. I mean, it is a complete collage of everything you can think of, and they're all substantial companies in their space. And then on Thursday, 329, we get Amazon, we got a bunch of pharma, I got energy here. Looking at, looks like this. I can't read my own writing, so I think it looks like maybe MasterCard. I'm not sure if that's what I wrote down. On Friday, then we have energy and banks. There's about 123, and typically even Friday are light days. It's a typical bad day to release any types of earnings, and that it's right before a weekend. There's no time the next day to react, so a lot of folks don't do it, but there's a fair amount, and there are reasonable companies coming out on Friday. So let's move on here just a bit more, because I think what we're looking at here is if we try to, I'm going to try to summarize this stuff. I think there's a good chance that the earnings reports, even though they're always mixed, but they're typical somewhere between 65 and 70% of the companies reporting are better. It's the forward guidance that we're talking about. And what do you do with forward guidance right now? Both if you're an analyst or if you're a company reporting, what the companies have been doing and why the earnings have typically been better than expected is they understate, they try to underpromise and overperform, right? That's the marketing. That's what you want to do in marketing. And I believe that's what goes on every one of these earnings seasons that we have. But we've got two wars going on. We've got massive financing coming in by the Treasury right now. We've got a Fed meeting coming up that is going to be a big meeting, I think, and trying to navigate through all of this stuff. I mean, this is a lot, folks. This is major stuff from the standpoint of what markets have to digest, okay? And then you come up with all the stories, market closed under the 200 period moving average. And I can tell you one thing, and I'll show you here in a minute. Even though it closed under the 200 still got a positive angle of attack. It's still rising, so it may not be as impactful. I think last time we printed below the 200, we stayed like even 4 or 6 sessions below it, and then it rebounded. And I think we're sitting here right now, folks. This is sort of interesting. Is we're right here where this whole market rally started last year. And you can play out that everything's pretty negative, but we were at 3502, went 4600, now we're 40 at 4200. You got to look at this. It's potential, maybe right shoulder set up, something like that. It's not signaling the negative. I would say the overall negative where it's collapsing and we're going to new lows and all this stuff's happened. Listen, with the type of things that we have out there, we have, I guess, if you were trying to grow a black swan, this is it, right? This is where it comes from. The deal is that it's a black swan because you can't predict it. So that's the point. So like I said, the amount of stuff that we have to digest this week is going to be really interesting. And in the end, it will come down to the data, and it's going to come into what the algos are telling me right now and how I'm going to view this market. And, most of our strategies are anywhere from 30 to 40+% in cash. So if you're institutional account or you have, or you're using WaveTech, you should be seeing something like that. When you build a portfolio, you should have somewhere between 30 and 40+% in cash. So we have protection on, and there's still plenty of companies out there that are still trending. Now, a lot of the major stuff that's out there and has pulled back a lot. So I wish I had about 3 hours. We could do a 3-hour stream tonight. There'd be no problem, because if I just took each one of these sections and broke it down, that would be the big deal. Okay, so we're going to kind of cut off this area here. And before I go into the WaveTech database, I just want to let you know that we are very close to announcing the webinar that's coming up. I've got a lot done. I'm working on day 2. It's going to be a 2-day presentation. It's going to be 4 hours roughly. There's going to be breaks in there. So it's probably going to take us a better part of 5 hours to get through each day. I'm dedicating this. I've been wanting to do this for quite some time. And we should hopefully have the agenda washed out by tomorrow, and at least high enough level where we can get this out so you folks can see what my plan is on covering this. And I would just tell you this one thing right now is this could be an event. This could be 4 or 5 events. And so this is going to be a fairly broad-based view of things, but it's going to go very highly into specifics on trading setups, all types of strategies and things that you can use to trade with. It's going to be pretty intense, and it's going to be a lot of fun. I'm really looking at getting into professor mode. I'm working on trying to figure out a couple things so I can get these monitors behind me so that we can use all of my big 6-headed monster here to be able to display everything. Okay, just want everybody to know, because we've gotten a ton of emails. I think there's still some surveys going out. A ton of you, thank you for filling out these surveys. They're very, very helpful. It's made it very clear what my task needs to do and what you folks are expecting. So anyway, let's get into the rest of the night. We got a lot to cover. We've got like I said, let's get into the database. There's plenty of action there, plenty of things to talk about. So let's go ahead and get into that. All right, so we'll start here with the WaveTech database. This is going to be, we're at 36.31. I absolutely will tell you that I'm surprised that it went down this much, but I think after the carnage that we had, the S&P was down last week alone, 2.4%. Nasdaq down 3.2%. Russell down 2.3%. So there was quite a bit of downside action, and a lot of stocks got sucked in. And you'll see here on the short-term database as well that this is fairly substantial. So we had on the intermediate 3,010 sell signals, 105 buy signals. So big bias you see over here where it says sentiment on the far right-hand side here, all negative across the board. I'll review the short term as well, but this is significant in that this is basically a reset from the standpoint that we've went down below this 42% level, and this typically sets up a larger correction phase and sets up a higher probability of a higher I would say the best way to put this, a higher probability that we're going to see more consolidation and possibility of seeing more downside. I still don't see any major collapse here. I'll go through like what we're looking at in the interest rates and everything as we come in, because I think we saw some climactic activity in interest rates. We saw a bunch of stuff that is starting to go, okay, maybe we get a little bit of reprieve here. And I think it's the same thing that we're seeing here. Seeing a big order run like this, typically I would love to have a nice up session today, especially those of you that are using WaveTech. Is nothing better than to have a nice up day on a Monday to get a better pricing on your sell orders that you have. And you still want to most likely build that cash in the system. Let's go over to the daily here just so you can see this. So daily's at 19.1. This is a short term. This would be, coming off of it, got up to around 29. We never got to the up to the 42 level. We just peaked up at around 29%. We probably are going to pull back in maybe around 16 or so. I don't think we make a new low on this database. The scenario that we're looking at from the standpoint of the database is really on a short-term basis, it's blowing out. It's basically, you can see here, there's 15,476 symbols in the database, 2,965 are long. If you look at the sectors, there's one sector left, and that sector's services right now is the only one that's hanging in there, and it's underwater a little bit from where it came in. It came in, actually it's interesting, it came in on a daily basis like 3 days ago. I wouldn't be surprised to see it kick out, and there'd be 100% of this, of the market out from the standpoint of sectors in that rotation. It's I'm going to go back just for a second because there's some things I want to review on the weekly as we go back as well. But the bottom line is that the database on a short-term basis has been really blown out, where 8 out of 10 stocks and mutual funds, ETFs, you name it, especially anything that looks like a bond, has been out. And so we've been out of this market on a short-term basis. We've had a little more holdings, but even then, we've been pulling back from the highs. So let's go back. Just want to go back to the weekly for just 1 second here. And I'm going to go full screen so you can see this whole screen. So we still have 2 sectors that are long, conglomerates and healthcare. Healthcare and both of these have very long-term holding profiles. So for instance, the conglomerates typically holds 427 days. That's a better part of a year and a half. And then on the healthcare, it typically holds about 212. We're about played out on healthcare, but there's 14% returns on a conglomerates, but everything here is neutral from the standpoint we got consumer cyclical to sell out just for tomorrow opening. So that leaves just these two sectors that are long right now. So the entire database is we've got 2 of the sectors long, only 36 of the groups, and the groups are the industry groups. If you click on groups here, let me just bring that up just for a second. These are all the industry breakdowns of each sector, and you can see there are some in here, but most of these are even out. You're looking at only 35% of the groups are still hanging in there with the symbols at 36. So it's very similar to those numbers. And I just want to paint this out that we've came in for the last, I don't know what it is, about 6 weeks plus. We've been building this position of cash. And the nice thing is, and for those of you that have known me for a long time, I've always preached that cash is a position. And even though cash was once upon a time, not that long ago, was the not paying a lot for being in cash, the benefits of being in cash and not having risk exposure still makes it a position. Now it's a really good position because it's paying 5+%, and you're getting paid for being in cash. And some of these cash positions are starting to build a little bit more, especially after this weekend's run. So let's move on. Let's go ahead and get into the S&P. All right, so I will go through basically the weekly outlook. Last week we were able to challenge the extremes on the weekly chart, so they're significant. We're seeing a bit of a bid right now on the hourly chart. We're coming right into RXT hourly, but if you look at the algos here, they are projecting that we're probably going to rally, recover, probably toward somewhere between, we'll just call it 40. The min is going to be 42.68 to around 42.81 as we come into the London Open. And I would expect to see the market rally up in there. And it does look like, in general sense, it's going to stabilize as we head toward the U.S. Open. There'll probably be a little bit of a dip. But we'll set this all up on the daily charts because the algos are actually projecting are starting to project some upside here on the dailies. I saw somebody say even Ray Dalio changed his mind on cash. Of course he did. Since Ray left, he's been wrong. So let's go ahead and go to the daily. Daily suggests that we have probably 1 day, 2 days coming in. I think the potential turnaround day is going to be the old, what is the old adage, turnaround Tuesday. I think that's what we're setting up for. I think there's still, I don't think there's plenty of downside pressure yet in these markets. You got PPM1 in trend mode at minus 0.25. And that's going to tell you that anything that gets near this 10-period moving average, 43.30, is going to be a ceiling. You're going to see a rejection. If I don't know what would get the markets up to that level right now, but certainly as we start to see some potential consolidation around these lows, then there's some possibilities. I need to point out, and I mentioned these numbers the other day, there are 3 Fibonacci targets that are suggesting that we have some downside here, and that the min is exactly at 4,100, 39.73, and 38.95. That's these 3 red dots that you see here. But this is what I tell you about this. Those of you who have the indicators, when you see these projections like this, now this is what the fourth day that we've seen these fib targets, but when you look at the PPMs and they're not confirming that what I call the downtrend is expanding, otherwise the negativity of the PPMs are starting to accelerate in that direction, we're seeing the opposite. We're seeing somewhere around Tuesday coming into Wednesday, which is where all these big earnings reports coming in, is I don't see any of this other news is going to be impactful until we get into Thursday, Friday, when we get into PCE. And even though the GDP, I don't think is that impactful at this time, but we've got a bunch of stuff that comes into employment and inflation at the end of the week. But coming in to Wednesday is where it looks like it wants to turn around, and then it doesn't look like anything robust on the turnaround. So what I'll do with these algos, I'll take a look and I'll move my cursor over to Friday, and if it hits the projections, then what will happen is we'll probably get some type of a move where the PPMs are still going to be negative at 0.18 or greater. Anything under, we're in negative mode now, anything under minus 0.15 is going to be enough to suggest that there's going to get a rejection off of this moving average. So there's not a lot of upside. As I said, over the last several days, there's no upside, and it looked like there was a target for the 200. It now looks like there's some acceleration that could happen here. So when you have the environment that I set up as we come into tonight's video, you have all of this potential negativity. You got wars. There's a lot of saber rattling going on over there right now, and you got everybody with military equipment in the area around Israel, and you've even got the Chinese got stuff in there. Everybody's there. So there's probably lowers. I'm not sure anybody wants to do anything, but it's sort of like everybody's got their weapons out, and it's like, who's going to shoot first? And if someone shoots, then you know the rest of the story. It's like the classic setup with some Western movie and a bar scene, right? That's what it looks like right now out there when it comes to anything around Israel. And there's so much emotion around it, rightfully so. So, but interesting enough here, folks, I went through, it does look like I went through, I won't cover them tonight, but looked at the shekel, I looked at the Tel Aviv, T35, I looked at a bunch of indexes. They don't look good, okay? There's no way that the Israeli economy is disrupted. Like I said, probably worse than if you're looking at anything that COVID did. It's probably worse than that from a disruption, because this has much bigger impact that is real and measurable, depending on what happens. So lots of volatility here. But the buts is as we come in to the 1st of November, it looks to me that we are likely to rebound back into some of these levels if we can maybe get lucky and get a higher close today. But more importantly, if we get a higher close on Tuesday, then I think that we will, if we get the market grid to turn up, we might get 2 or 3 days into Friday where we see some recovery, but it's going to be highly muted. The levels that we're going to watch for, the extreme levels, are going to be maybe 4,300 to 4,330, and I'll be able to nail these down a little closer as we go through a few more days here. So let's take a look at the weekly. And of course, as you folks should know, is the 200-day and the 40-week moving averages are very similar. And this is a key element, as I mentioned in the opening comments, and in a few minutes ago is not only is the 200-day moving average at where we're trading now, but it also has a upward angle of attack. So I went to weekly and going back to daily for just a minute here. I want you to notice that down at the bottom, the PPM 200 is a plus 0.04. That doesn't sound like much, but that's pretty robust, and it looks like it's going to stabilize in a positive mode. So if I blow up this chart, this is daily, you can see that upward angle of attack here. So we came down in early October, hit it. We're bouncing off of it again. And I'll show you that potential right shoulder setup here when we go to weekly. One of the things I didn't do, I didn't set up the market grid for tomorrow. So we're looking probably for tomorrow. Right now, S1 is 32. That would be a new low in the pattern. R2 is 42.82. Probably your upper end. You'll get into some of these moving averages I was talking about around. Yeah, so that would be, we're not even going to get into the moving averages, just in these upper ranges. If we get, like I said, if we get the daily market grid to turn up, it's being forecasted that that's what's going to happen as we come into Friday. But we got 2 or 3 days maintaining downward momentum. So there's going to be vulnerability to the downside, and we could get a quick spike all the way down to that 4,100 to that, let's say, a spike down, and I would watch to 4,100, which would be fib target 1 on this pattern. That would be the action that we see there. It would be, that will be, tell us everything about this market when we get there, if we get there, and what it and how it acts at that point. So just know that there is vulnerability. If we just look at the market grid for tomorrow, the downside market grid is STX is 4180. So we did not get an STX buy signal on Friday, and we still have that upward slope. So this 200 period moving average is going to be significant. Now let's go to weekly. Okay, as I talked about, the 200 is up. If we look here at the 40 period moving average on a weekly, which is, let me just demonstrate something to you in case you're new to this channel. 4277 is the 40. If I go back to the daily, the 200 right now is at, get that value, 200 is 4259. Okay, so they're slightly different but similar, and so I would call 42, I'm just trying to get these numbers here right now so I can put the puzzle together for you. Yeah, so 4250 to 4279 is going, I'm just rounding these numbers off. That's probably where you can get a bounce out of that level if they blast through that level. Hang on, I got to get the right numbers, folks. I'm sorry. I'm on a weekly chart. Yeah, so here we go. Now I do. 4180 is the 200. I'm going to get this straight yet. Bear with me. And then the 40 is right now 4277. So they're $3 difference. But look at the PPM 3. It's at plus 0.15. That's the minimum value that it needs to hold that it represents a support level. So we have support right there at 4270. Like I said, if it broke down, if we look at the fib targets on this, we had a 4281 fib target 1, 4172, and 4105. So that fib 2 weekly could be the print low where we could get a big bounce off of that level. hopefully I made some sense out of that for you folks. All right, let's move on to Nasdaq. We should get through most of this pretty quickly. So weekly Nasdaq, interesting enough, we have, this is one of those situations where the WaveTech fib target is giving us up and down. We just got a new up target, which is interesting in itself, for high target 115,596. But this is once again that situation I tell you, when you have high and low, if you notice the PPM2, PPM3, and PPM1 are all pointing to negative numbers. And I'm going to blow this up because most likely what we're going to end up doing is coming down to fib target 1, which is 14,266. And we're already in this pattern. I'm moving this around, bear with me. This pattern here between the rising 40 and the declining 10, that's probably going to be where we stay in that little wedge area. And there's also an argument that we're trying to complete an ABC down, but this would complete it much better if we printed down to, I'll just round up the 14,250. So 14,250 would be a really good point for us to kind of come down to. That would complete the pattern. But I think overall we just stay sandwiched here. This rising 40 on the weekly is going to be the big number to watch for. And that number is right now at 14,137. So that would put us right down 14,2, 14,1. We'll just round numbers off. That would be the extreme, and I think you can trade off of that. It does look like there's some pretty negative numbers coming out. Let's check out the daily. See, so daily looks just like the S&P, as we've got, looks like maybe negative pressure all the way into Wednesday. The market grid's down. Like I said, it's possible if we get a slight upward close today, then we might, if we can get the market grid to turn up, then we can at least set up a little wedge where we come up toward this 10-period moving average, which right now is a minus 0.32. That's big time trend mode down. So that tells you anything that got close to that 10 would be a sale. It's way out of range right now. We're looking at maybe getting down to 14,950 as we come in to maybe, I'm just looking here, coming into maybe Tuesday, possibly on Thursday. Just trying to get this number to click over for me. Yeah, then we would be around 14.9 on Thursday, because these numbers are continuing down. So definitely some downward pressure for another several days, and it's just a matter if we get like a blow off bottom, a number that bounces off one of these key areas, whether it's a market grid number on a weekly, or if it's some type of moving average bounce, or maybe even just a fib target bounce. This is daily. I'm going to go back to weekly here for a second. And this is probably, if we're going to get any type of major bounce of any sort where we got to an extreme, it would put us down 14,266 down to 14,250. That would be, if you saw that, you could probably look for a bounce off of that level. But everything's still pointing fairly negative here. The PPMs are negative. And if you look at PPM2 here, I've got my cursor right here, that is really starting to look like it's going to roll over a little harder, and that's going to ultimately represent the top end. So I've been trying to show you this, folks, because this happens all the time on these little wedges here. I'm going to draw in on this real quick here. I'm going to use the arrow to draw, but this is the pattern I'm talking about. In fact, let me go to just a line here. So where we get, I'm going to try to draw here. So this is the area I'm talking about here. This little wedge. We'd probably end up just working this area, and then down here, when we get over here, maybe we can get a bit of a rally, so you get some kind of maybe A, B, C, D, E type pattern, and then maybe a rally down the road here. But this is likely to be the type of configuration it sets up, and this rising 40 all the way through here is going to be the magic number to watch as we go through this particular syndrome from what's going on out in the world right now. But that is actually, like I said, that's going to put us down at that 40 period moving average, 14,250, 14,150 in that ranges. And like I said, once we get there, then I'll be able to target this a little better once we have some technical patterns that we can pick up on, saying what actually unfolds here. Sorry, hit the wrong button. Pretty ugly with the, we should rename this the zombie stock index. Crazy reversal last week. We went right up to the market grid numbers. And get up here, we'll see RXT 1783, the high was 1779, low 1680, and S3 1670. So basically did a RXT all the way down to S3. And interesting enough, now this is a weekly chart we're looking at. It's suggesting that this is going to be maybe the beginning of an upward pattern. It's still on a downtick, so there's still going to be some downward pressure on all these indexes. Then maybe we can start to turn up as we come into deeper into the fourth quarter. And this index here is just really big time in trouble. And like I said, it's got all the banks, it's got all these zombie companies that are going to have a tough time to actually work through some of the issues that are presented by the markets. And we'll cover interest rates next. Let's go over to daily. This is the cash index we're looking at, by the way. Cash index is, and let me go to RTY because it works here on. So RTY, everything's looking like Monday, Tuesday. We've got some downside. Maybe all these earnings that come in Tuesday and Wednesday are the ones that we potentially can get a bounce from the standpoint of what the configuration is telling us. But all these markets are in big trouble. And like I said, you just look at everything that's going on in our database that I covered earlier. You got 8 out of 10 stocks, no position on the short term, and on the intermediate, we're down to 7 out of 10 long there, out, only 3 out of 10 long. So it's basically the database is pretty washed out. There's no, the trends have all, what were out there have disappeared. And so this negative rotation looks like it's going to continue. And nothing good is likely to happen from this standpoint. And one of the things that, just a quick mention on the database, I'll probably use the Portfolio Expert dashboard as a reference tomorrow when we do on Monday night's video. All right, let's start with the 10-year. We saw a couple things. We got an RTX sell signal on the 10-year. I've seen people, I'm showing here the high was 499.6. I've seen people talk about rates above, I guess maybe, I don't know if there's some exchange it showed that we got higher over 5%, but regardless of that, 4.87 was the RXT last week. We got a close here at 4.92, and that's a bit off the highs. The dailies really reacted pretty strongly here, and my expectation, you can see that the algos as we go forward here, they're leaning that the momentum's going to start to die off, and typically what happens is we'll trade sideways into this moving average, and if I've got my cursor here around the peak of this average, it brings us back to like 480. Okay, so we're probably seeing some kind of peak in the interest rates here, and possibly to see it drift down in. I think the daily charts will give us a little better perspective. We traded down toward the end of the market grid. When this chart won't update with the market grid till we get the first print, and when we do, we should see a downtrend. And I usually don't, I've been sticking to this. I want to see something here. Bear with me 1 second. Yeah, so this is interesting. This is weekly. Let me go to daily. So weekly, this actually, TradeStation has the ability which to project the next session. And this one is projecting that we have R1 is 499, which would equal the high that we put in last week. R2 is 506, R3 514. This is just off market grid. S1 485, and then S2 488. So I would probably go with the potential of an R1 because of the weekly RXT sell signal that we got. Probably going with an R1, which would be a retest of the high. Maybe we print just above it, and then S2, which would be back to a 478 here on a weekly. So let's go back to TradingView. So once again here, this is the daily on the 10. You can see it does have a little bounce being forecasted, but I think what we do is we start to consolidate, move back toward these moving averages. Like I said, probably 485 and 506 is probably the upside, which is R2. But typically what we get when we get one of those RTX sell signals like we got on the weekly, we'll get 1 to 2 weeks sideways. So we'll work within that. Like I said, probably on a weekly, R1, S2 is probably where it ends up going. I don't see any major moves happening in here at all. Let's go ahead and take a look at the 2-year. Let's see, 2-year reversed pretty substantially. This is the daily. It came all the way back into these moving averages. Here's an RXT sell signal that we got on Tuesday of last week. We got basically 2 days sideways, and then it just followed through to the downside back into these moving averages. The scenario that I've been talking about is that we're going to hover around these moving averages from this standpoint right in here. So the other quick mention I'll make, and we're getting right at almost at 1 hour here, folks. So we'll run over just a little bit tonight. But the bottom line is what we're looking at is these rates should stabilize back into these moving averages. The back end of the curve is going to stay more elevated than the front end, where we should see everything, though, pull back, let's say 15, 20 basis points max on the 10. And on the 2-year, it's just going to go it's going to flatten out here. I don't see much downside. It'll probably hold just above and chop around this 5% level. Let's take a quick look at the 2-year on a weekly basis. So you can see here it got a huge reversal down, still closed up on the week. But you can see what's happening with this curve that's being projected out. We're seeing that, and I've been talking about this for a while, is that somewhere as we come into around the second, third week of November, everything starts to roll as we come into year end. And most likely, if I were to go back and bring up an equity index, what you'd see is the opposite. It looks like folks will roll out of these short positions, but there'll be money flow back in towards the equity side as we come into year end. There's some seasonal tendencies for that to happen anyway. As you recall, and I mentioned when we were reviewing the equity indexes, that last year was where we got that fourth quarter low and rally into year end. That's pretty typical. All right, so we'll go to crude oil. And crude is interesting. It still has this upward angle of attack into the end of the month. So I don't imagine that we're going to see much downside, but we should still trade within the market grid. We got something interesting that happened is over the last couple of weeks, if we go back all the way back to September 25th, we saw this spike up and then the big reversal the following week. And then we got an STX buy signal. This is a weekly graph. We got an STX buy, which suggests 1 to 2 weeks sideways to up. We're through that now. We've got probably another week. If we look at the market grid as we come in, the potential here is R1 is 89.68. We're basically just below that, but look at the potential for a move to 89.60. I'm rounding numbers off to 91.50. The extreme would be a 93 handle, but we probably stay within the range here of these expectations. Now the 21 period moving average is up. The 10 is still up right now. You have to look at something here. If you look at the far right where it says PPM1 0.8325, that is a huge uptrend. It doesn't look like much. It looks kind of flat to curvish here when we look at this scale, but it's actually, if I expand it, it's actually more vertical than you think. This is a substantial, anything over 0.25. This suggests there's only about a 20% probability that the market will be able to stay below. This is a weekly chart here on crude. Will stay below anything that looks like this 87, we'll call it 87 handle. If it does get below there, last week we printed down to 85.44. If we look at just 86.48 is S1, probably holds S1 and then prints up towards that 89 to 91 level. All right, we'll go to gold next. The last 3 weeks have been really good to Peter Schiff, right? So he's got to be just really excited. We printed up to 2009. That was a celebration moment. It backed off. He must have told everyone to buy again. The scenario that it looks like here, and I've been painting this out, is that this is probably, this week is probably close to the peak values that we're going to see in this run. A little shocked that we even were able to print up to the 2009 level. We should come back into these moving averages. And that's going to be back to 1950. 1965. That's going to be the number. We just look at this market grid here, and the potential here is S1 1977. We printed low already at 71. So look at 58 S2. I don't think we get much below S2. We're probably looking R1, S2. R1 would be slightly higher high. Hey, listen, we got plenty of action going on. Somebody's liable to swing the sword the wrong direction and stimulate a rally in gold here yet. There's still some upward bias. The PPM value now, PPM1 is at a plus 0.37. That's in trend mode, but the value that it's tracking and telling you that it's going to hold is 1937. So I'm going with that 1958. It's probably going to be around the low, maybe a print, just about maybe 2011, something like that. Yeah, Bitcoin's doing quite well. This is the weekly. I've been talking about the explosion in the algos going back weeks ago that we should hold these values. We actually held right here at 26,533. We look at last week's numbers here going back. That was right on the money there. But if we look at this chart will close out tonight at midnight for the week, midnight on New York time, I believe. And this is going to be the moving averages that I was talking about as far as where we were likely to get to. We got down to 27,100, the high 30,064. I'll show you on a daily chart because those were basically the targets here. And there's still upward fib targets, 31.9. I'm rounding these numbers. We'll call it 39.2 to round off. 34,700 and 36,300 is the highest range. And this looks very likely. It looks like we have multiple weeks that we're going to see upward bias. PPM1 right now is at 0.24. We're going to get an update. So those of you that have the algos, what you should watch for is on this PPM1, it should cross through its second derivative and it should tick up. It should be, right now it's at 0.24. It should go up quite a bit. It's actually being projected to go to up over the whole figure number, which would be a 1.2. If it's anywhere up, it's like I said, it's at 0.24. If it's anything over 0.6 or greater, that's really bullish. Chances are we're going to see higher prices through this week as we come into most likely a move up toward this maybe 32,000 level. Maybe at that point we might be able to get some interesting action, maybe start to consolidate. Let's go to the daily. This is where these numbers were, and I'm just going to expand it so you can see. We had 3 fib targets. These fib targets came out over here when the price of Bitcoin was at 27,117. The high target was 29,148, 30,147, and 30,700. And we got this spike trade here, went up to 29.8, and we went sideways. We got RTX sell signal, went sideways for 2, started another rally, and then we printed up to 30,233, and we got another, I'm just verifying the number here. Yeah, we got another RTX sell signal. Should get a couple days sideways. We did. We actually made a little higher high up to 33 364, and now we're sideways. And the dailies look like we're going to pull back toward these moving averages here. So looks like we'll probably soften up, but the weekly chart is going to be dominant here. I'm going to put that back up so you can see it. These weekly trends will be dominant going forward. That doesn't mean that we can't pull back. This is going to close out. We're going to get an RTXL here in the next couple hours. So that's going to tell you sideways on this from the from that standpoint. That's where we're likely going to see. And so, and I was talking about this. I see somebody mentioning retesting the 200. That's possible. That's 28.2. That's certainly possible. But the upward slope that we're getting here in the indicators are really leading us down this path. And this takes us into potentially all the way into February, where this, we'll just call this trend, is going to continue. So there's going to be a lot of interest for whatever reason, whether it's some of this stuff around the SEC and some of these things. I follow. I was reading an interesting story. Maybe this is. I'll save that for a minute. I'll come back on screen and talk about it. But that's pretty much the setup here. So. Okay, folks, I just come back up on screen here for a minute. Yeah, I follow Vlad from Robinhood, and there's some interesting things going on with the SEC. It's amazing. The government agencies, I guess their primary job is to make it as difficult as possible to do business, no matter what industry you're in. Certainly the current administration seems to think that way. But every roadblock you can, tax everything, charge fees. I used to run a broker dealer. I've actually been involved in 2 of my own broker dealers. I was on executive staff of a large broker dealer, and I can tell you that all of the regulatory people, the FINRAs, the SECs, and all those folks, it's just like they're like all policemen running around there, and they're pulling people off, and they're putting fees on good operations. They're constantly, and I know some of if you're one of my advisor clients, you know exactly what I'm talking about. FINRA comes in. That I used to have a friend of mine that worked for one of the agencies, and that went out in the field and did audits, and he said their direction was, there was never the perfect office or operation they went into. Everybody, they should be able to find something wrong to charge somebody a fee on. And now the reason why I bring this up is I was reading through a thread that there is now a proposal for anti-AI to be able to service certain types of aspects of customer service with broker dealers. So what it does is it forces that what we call here, and we talk about it all the time, is the man in the middle. When you have a lot of quant stuff, but there's still somebody has to pull the trigger and make something happen. So I've had this theory for a long time that if it can't be automated, don't do it. And we find ourselves all the time with the man in the middle clicking the button and gradually getting everything worked out. But this is a big deal, and I think they're about to press this thing pretty hard. There's something that's going to be, I don't know if they're ready to take any new laws into the legislature or do anything. They're so busy with everything else, it's impossible to get anything done. But I thought it was an interesting little thing here, and it's just possible that a lot of the things that we see going on in the world, I'm kind of still trailing on the Bitcoin, what we just went through, and higher prices into February or March or something at that level. And the reason for it may be just some of these crazy ideas that are coming out of the government agencies and all of this regulatory stuff that is driving prices higher or cost of things higher. And, of course, you could question whatever, but the original, I'm doing air quotes here, the original theme for Robinhood was to make trading accessible for everybody. And I use that term all the time, folks. I talk about that trading, being involved in markets used to be for somebody. Now it's for everybody, because you can open an account with Webull and whatever, Robinhood, name your broker dealer, there's a bunch of them, for like $5, right? You can get involved. So now anybody and everybody can get involved with the markets, which I think is a wonderful thing. It's increased liquidity. It's changed some characteristics of the markets and all of that stuff. So I guess I'll just close out here that I think that that's something that's maybe going on in the backdrop. If you were looking in the behind the curtain, one of the fellow traders on the trading floor, when the arbitrage would come in, the arbs would come in to buy or sell the market, he used to always say, "Do not pay attention to the man behind the curtain." Well, because it's not real, but it is real while it's happening. I used to argue all the time, say, well, you can not pay attention, or you could get squeezed in a trade that you had on. And so I would just tell you that I think there's something going on more than futures contracts and other things, not to mention wars, all the stuff that's going on that is driving Bitcoin. And there's a potential here for some explosive price into some of these upward Fibonacci numbers I just mentioned. That's just my general thoughts on things. I'm not a Bitcoin expert. I'm not anything other than I'm observing the stocks, observing the numbers on Bitcoin from a technical and quantitative viewpoint, and as always doing reverse fundamentals, going, what would make that happen? And I can come up with a whole bunch of stuff right now. So anyway, folks, thanks for hanging out on a Sunday night. Really appreciate. Looks like we got a pretty good showing here, and I will be back tomorrow night. Good luck trading tomorrow. I think we're going to have somewhat of a muted range in the levels that I talked about, but make sure you're keeping things tight, because volatility could bounce out of anywhere. And what we saw a couple times last week, and I suspect we will see it this week as well, is that there will be little air pockets around, and by that, where I use the order book to trade a lot, and I can tell you that when the order book blows up and there's just no liquidity, then the volatility increases, the transaction numbers start to increase, and that's something that when we get into the webinar, I'll go into details and price discovery, order books, and all that kind of stuff. Anyway, folks, thanks for watching. See you tomorrow night, same time.